right, welcome to the new weekly outlook, everybody. So we're going to start off with the fundamentals as always, and then we're going to go ahead and move on to the technical side with Stefanos here.
What is up, guys? Looking forward to this. Hope everyone had a good week. Or weekend. Let's get into the breakdown.
Awesome. So we're going to start off with first G7. So we know that last week it was a 3-day meeting that they had. And so what I want to look at going towards the end of last week was what was the package that G7 were going to agree on in order to help out Ukraine. So the sentiment was already there before even day one of the meeting that everyone is in pretty much union to support Ukraine, right, in this war, and that there was going to be some sort of package that was going to be provided in order to help Ukraine. So right now it seems like they have all agreed on about $19 billion, which is 18 billion euros in aid for Ukraine. And this is for short-term finances, especially for the government, the capital government in Ukraine. So what we see right now, I want to continue down before we look at some of the figures that they have up top there. So the Ukrainian government said that they need about $4 billion to $5 billion per month in short-term funding, while over the longer term, it's going to require recovery strategies similar to the Marshall Plan for Europe after World War II. So overall, what they're looking at is a reconstruction effort that will cost around, looking at the conditions right now, around $600 billion. So what the G7 have agreed on right now is $19 billion in aid, which is short-term, which is a lot more than what Ukraine is asking for their short-term funding, right? Which is pretty much a good thing. Now, when you break that down, what they have discussed is that the cash is going to, $7.5 billion of cash is going to come from the US and also the European Union. And we also have the UK stepping in, you have Japan stepping in, you have Germany stepping in. So these are some of the countries that are part of G7 that are going to be stepping in and pretty much coming together and pulling all this money in order to help Ukraine in this war. All this really does on the sentiment side is pretty much push the sentiment that the war is still continuing and that we can expect it to continue for, next couple of weeks or a couple of months, as long as the funding is pretty much being provided in order to help Ukraine stand up as well against Russia. So when you go further down, you see, some more details about this, some more breakdowns of what's pretty much going on. And then this takes us right into this next news of U.S. defense chiefs saying that 20 nations are sending weapons as well to help Ukraine again in this war, which furthers the sentiment that the war is still going to continue and we can continue to see these tensions rising in the next couple of months or a couple of weeks as well. When you continue down, you see all the breakdowns here as well, pretty much minute by minute, if you want to take a look at that. But right now, when it comes to the safe haven currencies and commodities and the tensions, it's still continuing. We're still seeing the tensions rising, which you will see when Stefanos breaks down, GBP, JPY, or gold, how we're sitting at key levels. And these are the fundamentals that are really going to help support the move in one direction or another. So this is what we want to be paying attention to in the next coming weeks, especially since all of this is also affecting inflation, which is a major issue that we have seen on a global scale, right? In Ukraine, in UK, in US, in Japan, pretty much all the different countries in general.
Especially with the oil.
And then moving on to the Fed. So for the Fed rate hike pause in September may make sense. So what we have seen from Powell last week was a sentiment that they're going to continue increasing interest rates by half basis point hikes in June and then also in July. And in September is really when they're going to take that step back and drop back down to quarter basis point hikes from half basis point hikes. And so it seems like right now, the sentiment is being shared across the board that yes, it is a very good idea to pause the hikes in September and maybe just maintain the interest rates instead of seeing any sort of hikes in general, right? Instead of even doing a quarter basis point hike, maybe we just sit at the interest rate, whatever interest rate that we end up coming to in July. Because as you increase interest rates, obviously you're not going to see the effects in the economy within a week or 2 weeks or 3 weeks or 4 weeks or even a month, right, in general. So it does take time. It does take, 1 to 2 months, maybe even further or even longer for that entire effect to ripple through the economy in the different sectors and finally get to the consumers. And that's when you really start seeing the real state of the economy. How are the consumers behaving according to the interest rate hikes, decreases, or maintaining them, because the consumers are the core of the economy, right? And so if they start becoming conservative with these rate hikes, then obviously you will start to see the economy kind of decreasing back down into a state of what they call recession, or maybe it just stays, stagnant It doesn't really increase. It doesn't really move into an economic growth. So those are some of the things that we could end up watching for. So what we really want to see is with these interest rate hikes, how are the consumers really behaving? And then you will start to see that effect on the retail side. You're going to start to see that effect on the production side, manufacturing side, the banks and everything like that. And then finally, you see those being translated into those high impact news, such as, what's happening on the employment side, what's happening with the inflation. Obviously, that's why we're increasing interest rates to combat inflation. And then also what's happening with the monetary policies. Do we continue the accommodative policies where we're still putting in money, or do we move right back into contractionary where we can increase interest rates, we can pull back the money, we can start to see quantitative tightening instead of easing, right? So those are some of the things to keep in mind as we're looking at these interest rate news coming out, not just from the US or the UK, but also like Australia or Japan and all the other interest rates that you will be seeing. Now, what we have here is obviously Brexit, which is still going on in the background. We haven't really talked about it much in the last couple of months or so, but we still have, emphasized the fact that it's still going on in the background. There are still effects that the EU and UK are still struggling with when it comes to Brexit overall. So now the eyes are pretty much, and the attention is pretty much shifting towards this bill, the controversial bill regarding the Northern Ireland, right? And so that's where we've seen both parties come into a conflict, the UK and the EU, where the UK wants to have a little bit more rights when it comes to Northern Ireland, trades, exports, imports, and the EU is pretty much saying no. So what they're doing now is, you have some key dates here where the UK is introducing a controversial bill, and we are going to, the first date that we want to watch out for is going to be June 6th. So that's when they're going to be, talking about it and discussing it. And then there is a 6-week window to pass the bill, which leads us right into July 20th. And as you continue down, while they're discussing this bill, the EU has said that they are ready to suspend the entire trade agreement if Johnson makes good on his threats. And the bloc has warned, so the bloc is the EU, they warned last week that it was prepared to use all measures to punish the UK if the bill is enacted. So again, that's further tension. So you have Russia, Ukraine, and then now you have the EU and UK as well, still talking about these post-Brexit topics in general. Now moving on to the economic calendar. So we started off quite easy so far. So Sunday was quite easy yesterday. Today was quite easy as well in general, besides Governor Bailey speaking. But tomorrow is really when things start to pick up, when you see the flash manufacturing PMIs and flash services PMI coming out from the Eurozone, also from the UK and the US. So tomorrow's London session and US sessions are going to be a little bit interesting. I do expect to see a little bit of more volume there. And then in Asian session, I think the eyes are pretty much going to be on the New Zealand dollar as the interest rates start to come out from there. So same thing, what we discussed in this previous article here. How long does it really take for the interest rates to have their effect completely through the economy? It applies to the same to the New Zealand dollar here as well. So right now we are expecting to see another 0.5 basis point hike when it comes to New Zealand's interest rates. So if you're trading the New Zealand dollar, then that's what you want to be watching out for. And then in Asian session, I do think that's where the volume is really going to be coming from. And then going into pre-London session, you have the German consumer climate. So that's pretty much the consumer confidence, right? And that's important because Germany is the leading economy in the Eurozone. And then you have ECB president speaking, and you also have the ECB financial stability review in London session. So if you're trading the London session, that's what you want to be watching out for. And the Bank of Japan's governor also speaking during that time. So that's when things are going to start picking up. So tomorrow, Tuesday. And then you have the FOMC meeting minutes coming out, and then you also have the New Zealand central bank's governor speaking as well, pretty much in New York session. Then things start to die down a little bit going into Thursday's London session, as there is a German bank holiday and a French bank holiday. Really, the only news that I'm watching out for on Thursday is going to be the prelim GDP coming out from the US. I do expect more volume there. And then same thing, you end off quite easy for the rest of the week. And then one last news to watch out for is going to be the PCE price index. This is inflation minus food and energy. So this is really going to tell you where's the actual inflation. If overall this number starts to increase, for the most part, we have maintained it, right? But if this does start to increase, and this tells you that there's inflation in all sectors of the economy, whether it's food or energy, and we know that energy has been one of the outliers that has been skewing the data for the most part. Now we'll go ahead and move on to the technical side with Stefanos. Go for it.
Yeah, no, I was gonna say, I think with the raising of interest rates, we're not seeing inflation drop at all, but we are seeing it kind of slow down just a little bit. So again, like you said before, like you're not gonna see the effects of raising interest rates for a little bit, other than the stock market right now and gold and all these other pairs. But yeah, that's something that's gonna take a little bit. But you are seeing that slowdown in inflation. But let's go over here to GJ. As always, we have our key levels over here marked off, some historical levels. We have our multi-year downtrend, our support that was held in 2008, right? From that crash down in the uh, subprime mortgage crisis, came right back down to 120, get that retracement. We retest the previous low, holding that support. Then we get that market recovery that we're kind of in right now. If you guys take a look at the current price action, it's pretty similar after COVID, very similar to the price action we had in here in 2012, all the way up to 2016, where then Brexit ended up coming into the picture, right? That cap, basically tanked the pound over here with a lot of uncertainty in the pound and in the UK economy once they did announce Brexit breaking off from the EU. So then after that, you get that recovery, and we retest the previous lows over here, holding that support. And then again, we had COVID right over here, retesting the previous support again, right? Holding this area over here. And ever since then, we've been bullish, creating higher highs and higher lows, right? So zooming in now at the current price action, since tanking here in April and March of 2020, again, making these higher highs, higher lows, tapping into this 156 area we were doing for months. We were just rallying up here all the way up to 156, retesting the previous high over here from that recovery from Brexit, the retracement from Brexit, ended up tanking and tapping into a very key area of a bearish trend over here, as well as the resistance over here to the left. So then price came into this area, 149, the previous candle body highs to the left over here, held support. We bounced around multiple times from the expectations of raising interest rates. They never raised interest rates, which pushed us down in November. And then December, they ended up raising rates, right? Then we had a couple of different rate hikes over here, as well as the Russia-Ukraine conflict, which had us grab liquidity, tapping into this multi-month uptrend. Actually, it's multi-year uptrend now, tapping into the area, grabbing liquidity, flipping bullish, and closing a very strong bullish candle right over here a few months ago, right here. Very strong with a wick to fill. Then we got no candle or no bottom wick on this candle, pushed up past the high of this wick and tapped into that 167,500 area where we had that previous support, right? So ever since tapping into here, we ended up rejecting it, closing bullish, but closing below that 164 area. Now, the reason I mentioned 164 is because the next monthly candle came up, tapped into the area, flipped bearish, passed the low of that candle, and came all the way back down into 156. So as you could see, very similar price action and very clear price action. If you were looking at this on the 30-minute, where you have your classic consolidation, price breaks out, creates a new high, right? We come right back down to retest the previous resistance over here, and then we continue up, possibly. Right, we just got to see what ends up happening fundamentally, right? A lot of fundamentals to move the monthly, weekly, and daily charts. Looking at the weekly now, we're holding a nice support here at 158, right? The previous resistance over here to the left, if you guys remember, price kind of consolidating in this area over here, and then it ended up consolidating over here to, in the recent price action over here as well on the lower time frames. So now we're holding that support in here, right? We got a nice bullish candle close with a wick to fill. This candle created its bottom wick. Are we going to end up filling that wick and continuing up from here to retest the previous highs, right? Now, looking at the daily, this is where it gets a little confusing. This is where you have this zone right here, previous support at 160. Price ended up, every time it tapped into that area, we had a nice rally, right? And then we broke below, creating this low, right? And then we closed right back into the range, looking like this could be a possible fake out. But then we closed right back below 160 again, kind of grabbing liquidity, and now we're right back above it. So what does that tell you? We have a giant consolidation right in here that we need to break on the higher time frames to see where we're going to go. Is this a valid range for us to go in the higher time frames, continuing back up to 164, or are we going to end up breaking the support down here and continuing right back down to 156 over here? Now, don't get me wrong, there's plenty of moves to grab in here, but again, on the higher time frames, you see that we have that consolidation now and a little bit of an indecision movement.
100%. It's also when you look at that after you mark all of that off on the daily time frame, you go back on the weekly, you start to see how right now what we're doing is a little bit of a corrective move of that massive sell-off that happened, right? So exactly what you said, Stefan, when you start looking on the lower time frames, like on the daily time frame and whatnot, that's when you have to really mark off, okay, what level needs to be broken for this to be considered a continuation or a retracement. Right. So if price breaks above, for example, when you go back on the daily time frame, the way that I have it marked off is if price breaks above this zone right here, then we know that we're going to continue up bullish. And eventually what you need to see happening here, and you just extend that over to the left side, you'll see how price has reacted here previously. What you need to see happening here on some of the lower time frames would just mean like some form of break and retest. And that's what would qualify as a break of this entire structure and a continuation rather than just a retracement.
Absolutely. All great points. Now looking at the 4 hour over here, I had this trend line over here, kind of a valid trend line where we were respecting this for the third time, tapping into this area. Now today we actually ended up tapping into here, and it looked like we were starting to reject this area over here, but we actually ended up getting a support held and price continuing up, because ever since breaking 160, this is actually bothering me, it's got to be 160. Since breaking 160, we ended up creating this low, but ever since creating that low, we've been making kind of like these higher lows and higher highs. Ended up holding support in this area, a 158, right? And ever since then, we've been like creating these higher lows and higher highs. So right now, looking over here, this is that level I was looking at this morning. You get that 160 level that we ended up breaking during London, right? Holding support in this area and continuing up. So where's our next area? Where's our most recent resistance? Since we are breaking this bearish trend and we're in this little uptrend over here, our next resistance that we could possibly tap into is right in here, right? You got previous rejection in this key area as well. We failed to reject this area to continue down, creating new lows over here. We actually just broke through. So can we be continuing up? Looking at the 1 hour now, starting to get a little messy. You're starting to see how it's getting a little challenging in here to be taking trades. You got a lot of big wicks, right, and smaller bodies. But what I could see right here is that 600, 700 level. I would say more like 700, 160, 700 over here. We finally broke above. We had a consolidation, a lot of big wicks over here. Finally broke above, created this high. And now are we going to hold this support over here, or are we going to get a deeper pullback to then continue back up? Right. But right now, I want to see if we hold support here for the Asian session, and then we can continue back up, retesting previous highs, possibly come into this area right here, this resistance at 161, 300, and then eventually continue up from there. Looking at the 30 minute now, it's very messy, right? Don't get me wrong, a lot of mess. What you had was this resistance right here. Price broke it. We had a deeper pullback back into that range over here, and then price continued up from there, right? So now what's going to end up happening? Is this a range that you even want to trade on the 30 minute? And where's our next target? I would say somewhere around right here. And from there, you definitely have around 30 something pips, 40 pips. Yeah, 35 pips that you could grab something in there. Fairly clean move to the left over here. So see if you get maybe a deeper pullback. Are we going to hold support? What I'm looking at, and when you get very messy price action, just read the candle bodies and the price action. So clean moves up here, right? We ended up holding a support right in this area. You had that previous resistance, now a support that pushed up, but now this candle ended up closing below that level. So are we going to get a retest right here? Resistance formed and price continuing back down to this support over here, or are we going to hold support? We have all these wicks rejecting this area right here and possibly continuing up. But I don't think I'd want to take any buys until we break resistance right here and continue up. And
One thing, sorry, go ahead.
No, it's all good. I was just gonna say, remember it's Monday, Asian session, so don't feel the need to rush anything. We got plenty of data points coming out during London and New York this week, so just don't try to rush anything during Asian just because you see a little possible buy or sell that you could probably take. Just stick to your plan, wait for your setups and lower your risk.
This is a type of setup that we have seen multiple times, especially like in 2020, right? When things were getting really crazy and we weren't really sure from a fundamental perspective, where were we sitting at? So whenever you get confused in a price action like this, like jump up to the higher time frames, the hourly, 4 hour. What you start to see over there, like right now in our case, is that there is a ton of bullish volume, right? But there's also a lot of liquidity grabbing that's going on as well. So this 160 or this 160, 200 area that Stefanos has marked off, for example, on the 4 hour time frame, that's an area of liquidity, right? So look at how many times price has tapped into this, and every time it taps into it, you know what happens. We have already laid that out for you guys earlier in this session right here. Pretty much told you guys what happens every time price taps into it, right? And there is a lot of volume that tends to follow. So what's happening right now too, where you have the candle closes, taps into it, there's a lot of bullish volume. So when you look up to those higher time frames, right now it looks like on the 4 hours some clean moves, right? But when you drop down to the 30-minute time frames, it's a ton of consolidation and whatnot going on. So when you get confused by lower time frames, jump up to the 4 hour time frame or the hourly time frame and take a look at where does it make sense for you to look for any buy or sell opportunities. So here, for example, if price were to make a bottom wick and break above this candle body high, then you know that you're going to come up to fill this wick, right? And then what does that look like on the 30-minute time frame? Same thing here, where if it rejects this again, then you know where you headed, back to the zone. So it's basically like two opportunities that you can take again and again, same exact copy paste trades, right? And what does that look like on the 30-minute time frame or 15-minute time frame, depending on when you're trading?
Yeah, that's going to be a very helpful tip to a lot of traders that are watching this, because I remember having that problem when I was first starting out in trading. Sometimes like the market would just get like really unclear for me. I know a lot of you guys had that issue as well, where it was just like, what's going on over here? Like, how am I reading this? And what I would do every time is just like, all right, let's just look for the most recent support and resistance, and let's also hop to the higher time frames and just stick with those for now. When you get all these wicks over here, like you could see even my zones aren't even that clear, just because like there's nowhere to really like draw these zones. You have this area, which is very important, but then you get price like consolidating in that area as well. And then you get the resistance up here. Where's price going to go? Right. Yeah. So you just hop up to the higher time frames, see if price is actually holding a realistic resistance over here and continuing down to get a deeper pullback, or we just coming back down into this area or here to hold support and continue up.
And these could just be those quick scalp opportunities, right? Because usually what I have seen, like from my experience in trading, is when you start to see candle formations like that, you will see one last burst of like volume, and then you'll see the market kind of correcting itself, because those massive wick rejections tell you that there is some sort of exhaustive move that's coming up soon.
Absolutely. So let's hop over to gold right now, starting with the monthly over here, looking at the bullish trend that we've been respecting over here. And if you guys remember, price was down here last week, right? We actually broke this bullish trend that we've been respecting, printing the higher lows, right? And then we bounced off with Russia, Ukraine, right? Continuing up. And then once tapping into all-time highs, talk started to calm down a little bit, even though that war has not calmed down at all. There were reports of talks, but the main point and main reason why we tapped into here is because this was our all-time highs that people are going to be taking profit at. And also the Fed was announcing rate hikes, and we got rate hikes since then, bringing gold all the way down and the dollar up. The dollar's been the strongest currency right now in the past like 2-3 weeks. It is correcting a little bit right now, but we'll see if we continue up with further rate hikes. Looking at the weekly over here. Weekly, again, what I was saying last week was that we consolidated in here. We broke 1910, 1900 area, continued all the way down, and we finally broke back into 1830, that previous consolidation over here between 1750, 1830. We finally broke back into there, And it looked like this candle was creating that low, coming up to retest this area, holding a resistance right here, and continuing back down, right? With the further sentiment, we can continue the bearish trend. But now we're getting a little bit of a pullback and a rejection of this whole zone right here that we've been sitting in, or we were sitting in for months on end. Retesting that area, are we tapping into it to continue up? There's also a level over here. If you drop down to the daily, if you guys remember, I remember consolidating in here for about 2 weeks. This 1870 or 1786, 87 level, you got that consolidation holding a resistance. And then every time price tapped into this area, you had a very big bullish movement, a nice rally right here, here, nice one right there. And now it's happening again. Right. So just understanding that is going to help you moving forward as far as like predicting buys over here if we get anything like that. Now, again, we held support here, bounced off that area, ended up holding support right here, 1810, right? And then price has been breaking that resistance, breaking 1830 over here and continuing up. We have a wick to fill. Are we going to fill it? You also have this area right here, 1855, that price previously has had a support and a resistance reacting to it over here to the left. So now we're right in that area. Our next area, if we close above that, is going to be up here at 1885, 86. Here to the left. If you drag that to the left, you got clear support there as well. Now looking at the 4 hour, now it's starting to get a little messy again, right? That 1855, 86 level right now, I'm looking at to see if we're going to hold support. We're looking at that most recent support resistance. I also want to see if we have got our trend that we were following over here, held support, and finally started to break up, printing higher lows and higher highs. But right now, looking at this current high, we came right down into this area, and it looks like these candles are getting weaker and trying to hold a support. So are we going to hold a support in this area to possibly continue up to retest the high up here? Or are we just going to be like printing weaker candles and finally get some more volume in the market, and then we break this support and continue down from here back down into this area right here, which I'll actually mark off since this is the 4 hour and it's a very strong level.
That zone that you also have of 1854, if you just keep scrolling out on the 4 hour time frame, you'll see how price continuously just reacts to that level over and over and over and over again. Right. So that's how, yeah, so that's how you know that's more confirmation, but also that this is a strong level. So if price holds on to it as support, then we know that we are continuing bullish, right? And then obviously you would go over the confirmations here in just a little bit, how to take those buys.
Absolutely. Yeah, we have that resistance right there to the left. We'll just keep it there. We know it's strong. It's a 4 hour. So it's definitely a new high that we created over here during London yesterday, or actually during Asian as well, but ended up holding this support here. As you can see, strong bearish candle. This candle ends up passing the low of it, but printing a very weak candle. Then we get a doji bullish candle passing the high of the previous candle right there. Now, what's going to happen with that? So are we going to hold that support and continue up? What is this range going to be? Got about 125 pips to retest the high up here. So it's definitely valid. Let's see what we look like on the lower time frames. Now it's starting to get a little messy here. So as you can see right now, you have this previous resistance that we ended up rejecting this area, finally closed above, came back down and retest that level, and came up to create this high. Then we came right back down to this area. It looked like we were trying to hold support with this candle. Then we broke right back below. Tapping off this 50 EMA, we now close right back above. Right now we're starting to hold support over here. So can we continue up from here? This level, I think, is going to be a stronger level that we need to pay attention to. Maybe we can adjust it on the lower time frames, but maybe we need this area to be broken and closed above before we continue this up. Now that range looks a little smaller, but it's still 78 pips. All right, looking at the 30-minute now. Again, we're creating that higher low. Looks like we got that fake out over here. I get these scam calls all the time. I don't know what's going on. Anyway, you got that resistance right here. Do you want to grab price into this area? Is that a trade you want to take during Asian? or do you want to wait for that break above this resistance and you get a clean move to the left for about 80 pips that you can mirror?
So this is where the famous saying comes in, right? Limitation of your trade.
Oh, yeah.
So if you want to be looking for those trade opportunities, this one is very valid, right? In Asian session, usually when Asian at the Tokyo Stock Exchange opens up, that's when we see a lot of volume kicking in, right? So you could take that trade, but as soon as price, reacts off of that zone or something, make sure you're securing something, and then you can let runners go if you want to see a continued trade.
Yeah, I like to, when I do my full top-down analysis and I'm done with like the lower time frames, I like to go back to the higher time frames to get a better look and see what's going on. Again, I remember this level. I remember price being over here. I remember price being over here. Definitely a strong level. And now we are in a bearish trend. Fundamentals are against us. Obviously, the dollar has short-term weakness right now, but is this just a pullback where the dollar continues to hold support and continues rallying? Can this continue right back down and retest lows, right? Maybe this is just a deeper pullback of that weekly level of 1830, right? Is this just a deeper pullback for us to hold a resistance and then continue down? As you can see, this previous weekly bullish candle is strong. This one's getting a little bit weaker, right? This one starting to stall out in the bearish trend, major bearish trend. So can we hold a resistance up here and possibly continue down from there?
We also have to correct that entire sell-off that happened, right? And then if you hop up to the monthly time frame, this was something else I want to point out real quick, was that the level that we just tapped into, so exactly that zone that you have marked off here, let me annotate here real quick. Sure. So this zone that you have marked off, if you extend that over to the left, then we could see how this was also the resistance level that we tapped into back in 2007, 2008. I believe it was 2011 is when the recovery started.
Oh, there you go.
Yeah, right into that level. And then after that, since like 2020 until now, every time price taps into it, there's a ton of volume that kicks in. So I think that's where we're pretty much grabbing that liquidity from to correct that entire sell-off that happened on the weekly time frame. And then maybe we'll tap back into 1900 as a fundamental support to grab that liquidity for a final sell-off. But basically what's going on here is that's exactly what I was going to do, is we're mimicking the same exact thing. We're tapping into previous levels. And then when the fundamental support, then you see a corrective move.
Yeah. And we've been pointing this out, how similar this price action is to the left. And, the fundamentals go behind this as well, as we have right here as well. So we ended up creating these all-time highs, right? Mortgage crisis over here. You also have COVID over here, brought us right back up, corrected a little bit, right? Came right back down to this level. We had that final rally right over here, which we actually just had right over here, right? COVID or Russia, Ukraine. And then all of a sudden we held that resistance and continue right back down with the rising in interest rates right over here. What's going on right now? Can we just continue back down from here? Right. And so unless we get some major fear in the market, we're going to see continued sells on gold. So I would just wait for those resistances and keep taking price down. If we get the further talk, like as Sharma was saying, Powell is going to be speaking this week, right? Powell's speaking tomorrow. What's up?
Yeah, Powell is speaking, and then also the more sentiments being put out from all the economic data, especially the PCE price index.
Exactly. So all these things are just dropping little hints for you guys to get a good idea where the market's going to go. So pay attention to it, learn it, understand it more, and yeah, you'll be a better trader for it.
100%. So before we call it a session here, guys, so we do have the boot camp coming up this Saturday. So we have posted information about that on our Instagrams, but basically we're going to be covering everything from the basics of Forex to the different styles of trading and all of that, fundamental analysis, how to do technical analysis, how to take entries, how to manage your risk, psychology. And then we're going to end it off with a simulation session where we apply everything that we're talking about onto the session, onto the charts, and then also a Q&A. So if you guys have any questions at all, then, feel free to ask us or message us or anything like that. But the registration for that is going to end on Friday at 5 p.m. Eastern time. So make sure you guys sign up beforehand. And if you guys have any questions about that, then feel free to reach out to either of us and we'd be more than happy to help you out.
Yeah, absolutely. I mean, this can be massive value. Everything that we know within the course of 3 to 4 hours, all of us just back testing, learning, taking notes, all that stuff, just working together on a Saturday to get better. So If you guys want to be a part of that, I'm looking forward to it, and Sharma is too. And let's get to it.
Yeah, have a great week, everybody. And then as always, feel free, if you are feeling stuck on the charts or anything like that, send your analysis to us and we'd be more than happy to help you guys out. Again, it is completely free. We're not charging for any of it. We'd be more than happy to hop onto a Zoom if you would like that as well. But make sure you guys are trading safe, because there's a ton of fundamentals coming out, a ton of economic data coming out. And I know the charts can get messy, but always look up to those higher timeframes, because the lower timeframes will work towards fulfilling the higher timeframes. So make sure you guys always jump up and always pay attention to the basic candle anatomy and price action. Other than that, we'll catch you guys on Wednesday for our live session.
Sounds good. See you guys then.